The House of Representatives has passed a bill that will allow the Nigerian Stock Exchange to become a public quoted company. This, of course, means the second biggest exchange in sub-Saharan Africa can now issue shares to investors. The Nigerian bourse got an approval from its members, mostly stockbrokers and some institutional investors, to become a publicly listed firm. The bill was passed by the Upper House of Parliament in December 2017 and will be sent to the President to sign into law. Now, the exchange has around 200 listed companies and plans to launch exchange-traded derivative securities this year. Well, let's get an update on this from Deji Badmus. He joins us now in Lagos. Deji, as always, welcome to the show. Now that we're seeing this law establishing the Nigerian Stock Exchange being amended, how soon before we actually see the stock exchange going public, given, of course, the fact that President Buhari has not signed this into law yet?
Well, first of all, the stock exchange will not go public until the president, of course, signs that bill into law, because as we speak, it's still a bill. So the president is expected to give his assent to that bill. Once that is done, I don't think it should take much time before we see the stock exchange going public. But we do not know for now if the NSE now, the stock exchange, will be listing its shares. The last time that the CEO of the stock exchange had the 2017 review and, of course, forecast for 2018. Everyone thought he was going to talk about it. He didn't say so exactly if we would see the stock exchange be listed. I mean, be listing, new shares, so to speak. But he did say, I'm talking about Oscar Onyema now, he did say that he was confident that before the end of this year, the Nigerian Stock Exchange would go public. So as soon as the assent of the president is given, I don't think it should take much time at all, because this has been in the works for a very long time. And of course, this is what the owners of the stock exchange had always wanted. And as you know, they gave the approval for this sometime in March last year. So I don't think they would want to waste any time at all as soon as the approval of the president comes.
Well, Deji, of course, Nigeria's equities market was the third best performing market in the world in 2017. So why the push to demutualize?
Well, it's very simple. The management of the NSE has always maintained that, it is just good to follow the tradition of other stock exchanges across the world, where we've seen other stock exchanges demutualized. For instance, like the Johannesburg Securities Exchange has been demutualized. That of Nairobi, of course, same thing. And fact is, the management of the stock exchange had always wanted to expand. I mean, modernize the stock exchange, and the fact is that it will need capital to do that. So this gives it the opportunity now to raise the needed capital to modernize the exchange, to introduce some innovations, and to attract more companies now to the exchange, to get more companies to list, and to basically expand the exchange. So this is very good, because what we're going to see now is that we're going to see shareholders, people buying shares now on the exchange, people coming on board. I mean, those who, of course, would be buying shares will definitely be represented on the board. And don't forget, before now, the motive was basically not profit-driven, but now the exchange is going to be run, by the time it goes public now, is going to be run as strictly a business venture, and you would see profit-taking, and at the end of the day, dividends shared. So, and it will give room for competitiveness. And the management of the exchange has always harped on that is just the best way to go, to modernize the exchange and to make it competitive, to attract more investors now to the exchange, and to broaden its base. So there's no question that this is the way to go, and they have chosen to do it.
Well, Deji, as always, many thanks for your insights. Of course, that was Deji Badmus joining us there in Lagos.